All right, can you hear me well? Yes, perfect. Hello everyone, thank you very much for being here today. Today we will talk about Bitcoin treasury companies, my favorite topic as you know. And more specifically, the next wave for Bitcoin treasury company, what is to come and what's in it for Capital B. Capital B is Europe's first and largest Bitcoin treasury company. We have been known for being completely focused on deploying the strategy model at European scale and being completely focused on maximizing Bitcoin per share over time. To date, after 1 year of the strategy, we've been a #1 performing stock in France and in Europe, #1 volumes on Euronext Growth Paris, plus 1,600% of BTC yield year to date. And we have raised more than 250 million euros with legendary investors like Fulgur Ventures, Adam Back, UTXO Management, and Tobam that you've seen yesterday. Today we have 40 plus institutional investors, 90 plus countries covered over retail and institutional investors. We are the most liquid investable Bitcoin treasury company in the continent. And we have one of the strongest retail and institutional investor base out of all Bitcoin treasury companies. And more specifically, why have we been able to rise in that overall macro context is because Bitcoin is being adopted at scale by institutions, and the Bitcoin is being transferred from weak old hands to strong new hands that don't need to sell. Sovereign wealth funds, institutions with the ETFs, and now with the Bitcoin treasury companies. And the demand from Bitcoin treasury companies is now exceeding the offer that is available through Bitcoin mining. And so in that context, over 1 year, the number of Bitcoin treasury companies has been multiplied by 3x, and the amounts year to date that have been raised and deployed into Bitcoin are more than $40 billion US dollars, and this is continuously rising despite what you can see in the market as very high volatility, going up, going down very aggressively. What is in fact happening is the emergence of a totally new industry. Strategy has started this industry back in 2020 in the US. Metaplanet has then continued the strategy over in Asia at the beginning of 2024. And Capital B has started that industry over in Europe by focusing on maximizing Bitcoin per share over time as a business model. And over 2025, what you have seen is an explosion of offer in the market. And with what can happen with an explosion of offer in the market with similar demand, what you have been able to observe is a compression of the premiums attributed by the market in the different Bitcoin treasury companies, but simultaneously an explosion of demand for Bitcoin itself, which we have on our balance sheet. If you take a step back and look at the macro context, stop measuring value in fiat terms, but actually look at what is most comparable to Bitcoin, which is gold. What you can see is that every time that gold has a peak, Bitcoin used to follow that trend. And as Yves said yesterday from Tobam, this is not science, but if there is very high demand for gold, it's probably the case that there will be also a lot of demand for Bitcoin over time, because this is the best store of value in the world. It's the only asset on earth that has global adoption and absolute scarcity bounded by energy in the world. And so if you look at what is really happening is the adoption of Bitcoin as a replacement for gold as the unquestionable asset, and for Bitcoin to continue eating the monetary base of gold, that implies a potential 10x in value. And that is why Bitcoin treasury companies are positioned for the long term, because there is this massive opportunity with the growth of Bitcoin itself as a default mode for a Bitcoin treasury company. And on top of that, the Bitcoin treasury company can provide more value to shareholders by literally infiltrating global capital markets. So today, the actual market for Bitcoin for institutions is really that little small box that you can see in the 2 trillion market for commodities over in the European Union. It's larger over the world. But today, Bitcoin is really only being adopted by a few number of people, a few number of institutions, has a 2 trillion market cap. But the actual market size for digital securities, meaning Bitcoin-backed securities issued by Bitcoin treasury companies, is 50 trillion euros over the European Union only. So 10 trillion in equity, 17 trillion in monetary type of currencies, and about 30 trillion of credit. And so the next wave for Bitcoin treasury company is to go from that initial demand that's been the 2020 to 2024 period when Strategy adopted Bitcoin as a primary strategic corporate asset. But then after 2024, Strategy started to accelerate that strategy and go to equity markets and go to credit markets. And so now that Strategy has created this industry of digital credit, you have the different Bitcoin treasury companies that are starting as well to target that market. And so we've gone from a market of BTC savvy investors to a market of BTC native institutions to a market of equity capital market institutions, and that's already completely different. When we have roadshows with institutional investors, typically they look at traditional indicators. They look at the market cap, they look at the volatility of the stock, they look at the performance of the stock, they look at the P&L and the balance sheet, and there is a lot of education happening, and the industry is in its infancy. When you look even at Strategy, which is the biggest company in the sector, it's not even crossing $100 billion of market cap. And so in that context, you see that global markets are so wide that there is a lot of room to grow. And if the equity markets are wide, well, the credit markets are even wider. And what you can see is signs of disruptions of those markets already. Last year, Strategy took more than 7 to 10% of the convertible market in the US. If Capital B was able to tap into that market over in Europe, it would represent 3 to 4 billion euros, which would mean that Capital B could already be part of the 40 biggest companies in France. And so what a Bitcoin treasury company can do to take advantage of that opportunity of really the digitalization of traditional capital markets, the Bitcoin treasury company can issue digital equity, which is the equity of the company that is backed by Bitcoin on the balance sheet that is compounding over time with more Bitcoin per share, that provides amplified Bitcoin exposure over time, and that is for investors that want more risk, more volatility, and more upside potential. On the other side, you have a BTC digital credit that is mostly for BTC maximalist investors, high net worth individuals, institutions, potentially in the future as well, the opportunity to distribute more broadly those products. And that provides with the same Bitcoin exposure, because that is the standard performance with a Bitcoin denominated convertible bond, for example. That provides with about half of the volatility, because in case the share doesn't perform, then the investor can get back the Bitcoin. It gets almost all of the upside, but with full downside protection on the Bitcoin. That has allowed Capital B to raise half of the capital that we added to the balance sheet. And today, already 80% of this capital raised is either already converted in shares, so permanent capital, or in the money for investors, so that could be converted over time by the company as permanent capital. So it's been one of the most effective ways and the first innovation that Capital B has done earlier this year to maximize Bitcoin per share in a risk-minimized way without any leverage, because we have Bitcoin on one side and Bitcoin-denominated convertible note over 5 years on the other. The third wave, when a company reaches a certain size, is as well fiat digital credit, in the sense of traditional financial instruments or new financial instruments with a new touch, as the preferred stock of strategy, for example, but in a way that completely shifts the risk-return profile for investors. So the first iteration has been the convertible debt instruments from strategy. And when you look at strategy and Bitcoin on one chart, you see it's about the same for 4 years. And then the ETF came and strategy had to actually innovate and go offensive on the model. And they launched the convertible notes. And you can see there is a complete difference after 2024 of outperformance of strategy by 2 to 3x against Bitcoin. And so when you reach a certain size as a Bitcoin treasury company, that is definitely an avenue for opportunity. In terms of the discussions we have with investors from institutions, typically those types of opportunities arrive around 500 million to 1 billion market cap. And we are today between 200 and 300 million market cap. So our objective is definitely to reach those types of scale so that we can go to the next stage. And the next stage is potentially even replacing or giving an alternative or building on top of what I just said, is the preferred type instrument from strategy, from Strive, coming from Metaplanet. Of course, Capital B is definitely looking at different opportunities, and it's the opportunity to provide investors with 2 different securities that are listed in the market. One, when investors are excited about the future and speculate that the Bitcoin treasury company will outperform, that is the equity. And another one, which is more of a monetary fund that provides a fixed return for investors. So there is, of course, a limited upside potential, but there is a fixed, stable fiat return for investors. And that is literally what half of the world needs, really, is, for example, a 10% fiat yield that can be accessed in retirement accounts and in institutional portfolios. So with this, strategy has been the first mover in digital credit, as I mentioned. Capital B, with the Bitcoin-denominated convertible notes, has been the second mover in digital credit, which may explain as well why Capital B has been the only major Bitcoin treasury company with strategy that has maintained a premium all over the summer and the market downfall. And why Capital B as well is definitely having a look at what is happening today in terms of potential future innovation. Smarter converts, Metaplanet preferred, the STRE, so that's the equivalent of Stretch in the US from strategy, the 10% equivalent yield on a fixed basis and stable principal, but in Europe with STRE, Stream, and potential future digital credit innovations with Bitcoin-based products, with tokenization. There is a lot potential to come. What is the value of digital credit is actually a capacity to provide to investor risk-minimized BTC yield maximization with the highest institutional liquidity potential and with the broader capital markets access over the world, as these products are in high demand with high potential liquidity and highly scalable and distributable, with the possibility for a Bitcoin treasury company to establish a form of yield curve for different types of investors and really start to become a form of digital bank of the future. When you look at what has had the most impact in the market today, you see that Michael Saylor and strategy have been innovating and being pioneered of the space, and they have tried Strike, Strive, Stride, and more recently Stretch, that you can see is the lowest volatility with some of the highest potential returns, but with a stable principal for investors. And this is the instrument that has collected the most capital to date, and this is the instrument that Strategy wants to internationalize and give that to a broader set of investors. So I get asked every time, what about Capital B in Europe if Strategy is coming to the market in Europe? My answer is very clear. I'm not surprised at all. I'm expecting that Strategy will own 50% of the global digital equity market, which is already the case, and Strategy will own 50% of the global digital credit market because they have the largest balance sheet, the most institutional scale, and then you have 50% of the market that is for regional leaders to take and to gain a local, regional leadership in their own region with their own specific mandates from institutions, because you have a lot of institutions that have the mandate to actually buy issuance from local issuers. And so Capital B is focused not on trying to differentiate and do something more complex that Strategy is focused actually on replicating and accelerating and scaling the deployment of the Strategy model at European scale with the regional dominance in terms of size, in terms of consistency, in terms of clarity, and in terms of execution. And that is where Capital B is positioned. And when you look at the European market, we've talked about 10% yield, 12% yield. The reality is the normal yields is 3%. So what is 3%? 3% is literally nothing. It's lower than even the CAC 40. Like if you would invest in an index of the French companies that have no Bitcoin, you would perform better than 3%. And 3% is even higher than what traditional and everyday people would have in their local bank account. They can pay maybe 0.5%, 0.9%. That is literally zero. And so in that context, Capital B looks at the market and looks at the different steps and rational moves to make sure that we capture as fast as possible, but as conservatively as possible, that opportunity. So to date, we've accumulated 2,818 Bitcoin. That is 94% of our target for the end of the year. And we have the objective to reach 1% of the total Bitcoin supply over 8 years. But the road will be, of course, including a lot of steps. The first one is definitely what we've been doing is to establish dominance over the region in terms of size of Bitcoin on the balance sheet, but not only in terms of size, in terms of quality of the capitalization table, quality of the credit instruments that are issued, no short-term risk, no liquidation risk in terms of the evolution of Bitcoin price in the short term, and long-term strategic shareholders like Adam Back, Fulgor Ventures, and potentially many more to come. We have, as well as a second step, when you reach 5,000 to 10,000 Bitcoin, there you can start to do large-scale institutional raises with the local institutions. Today, we've raised 90% of our capital through international investors. And that is actually a specificity in the European Union, is that the early stages, it's very difficult for companies to take that step, and Capital B has been able since the beginning to continue to grow aggressively with international investors. But after 10 to 20,000 Bitcoin, then you are able to actually do issuances at scale of new types of products similar to the ones of Strategy, but with a scale that can really make a difference in terms of Bitcoin yield. And then the objective is, of course, the credit market dominance. Of course, that's a high ambition, but the capacity to become a cornerstone of digital capital markets over the region, and to have the capacity to issue a broad range of different instruments and to internationalize them and to distribute them across different platforms, both in a traditional way and in a digital tokenized way. So our full focus is really to build a machine, an engine that is able to generate BTC yield for investors. So a Bitcoin accumulation machine for investors that want Bitcoin exposure plus a compounding effect over time of a team that is focused every day on buying more Bitcoin for its investors through the increase of Bitcoin per share. And that goes by, yes, a digital equity, which is the share, the main and common equity through which you can get the most volatility, risk, and potential returns. The other side, which is the BTC native side of capital raising with BTC convertible notes, for example, but there could be other opportunities. And the other one of fiat digital credit that Capital B is definitely looking at how to design that and distribute that in the most efficient way. And in order to do that, you need to have a very strong base of permanent capital. You need to have a very strong capacity to generate BTC yield without depending on market sentiment. That is already what we have with BTC convertible notes. And you need potentially some BTC alliances, which is quite a broad term, but that might include some potential consolidation opportunities. That might include as well some partnerships with industry players that are in the Bitcoin ecosystem, have a lot of Bitcoin, but that are private companies. And Capital B can provide a form of treasury as a service model for those companies. And institutionalization, which means, yes, private placement in a traditional way, as we've done with 30+ investors in September, raising 58 million euros while the market was in a downfall. And credit instruments that are completely transforming the market and innovating and making the contribution to the issuance of Bitcoin-based, Bitcoin-native, Bitcoin-powered credit instruments to provide part of the Bitcoin exposure to people that cannot afford to have the volatility of Bitcoin, but do want a form of 10% yield. And the next level, which can be run in parallel, of course, is the accessibility. So we have a process of a US ticker, which is taking too long, but I hope it will be resolved soon. And we are also based both in Luxembourg and in Abu Dhabi, where we are developing a lot of opportunities, both in equity and credit markets. And tokenization, we have a process that is ongoing of tokenizing the share to provide global 24/7 share accessibility and tradability against Bitcoin itself, and even in a self-custodial manner. And so with this is our roadmap in terms of capital raising and in terms of Bitcoin accumulation towards our 8-year target of 210,000 BTC by 2032 to 2033. And we are completely focused on building that, of course, objective with solid foundation, with Bitcoin permanent capital, with BTC native instruments, and with the ability to tap into the institutional traditional market and to contribute to the adoption of Bitcoin at scale and to contribute in that way in the adoption of Bitcoin overall. Thank you very much all.